Welcome to today's Business Report. I'm Denise Williams, bringing you the developments shaping markets, capital access, and business decision-making across Jamaica and the region. Let's get into the stories that matter. The Ministry of Finance and the Public Service reports that the national debt rose by 14 billion Jamaican dollars to 2.2 trillion Jamaican dollars in December last year compared with March. It says the debt is expected to increase further to about 2.4 trillion, or roughly 69% of gross domestic product by March this year. That rise is being attributed to the need to borrow more than the originally budgeted 158.4 billion Jamaican dollars, largely due to the economic and infrastructure impact of Hurricane Melissa. The debt is now projected to stand at $2.4 trillion, or 68.9% of GDP by the end of the current fiscal year. Meanwhile, the ministry says 1% depreciation of the Jamaican dollar against the US dollar would add about 13 billion to the country's debt stock. The ministry explains that this is because just over 60% of Jamaica's total debt is denominated in US dollars. Central Bank Governor Richard Byles says the Bank of Jamaica sold US $365 million into the foreign exchange market between November 1 and January 31, 2026. He says US $87 million of that amount was sold to Petrojam, bringing total sales during the period to US $452 million. Speaking at the bank's quarterly media briefing on Tuesday, Mr. Byles noted that despite these sales, the bank actually brought more foreign currency than it sold. He said the BOJ purchased US $152 million more than it sold during the review period. The governor also disclosed that between January 2025 and January 2026, the bank sold US $1.1 billion to the market. However, Mr. Byles stressed that during the 12 months ending January 2026, the bank purchased US $991 million more than it sold, reflecting the country's strong foreign currency reserves. He says the bank's ability to sell US $1.1 billion over the last year was supported by those strong reserve levels. For the trading period of February 24, 2026, the most actively traded securities were Trans-Jamaica Highway Limited with 4,351,699 units, representing 23.49% of market sales activities. Lasco Manufacturing Limited Jamaican dollar shares with 3,199,308 units, representing 17.27% of market sales activities. Sagicor Select Funds Limited financial shares with 1,152,584 units, representing 6.22% of market sales activities. Investor activity remained concentrated in transportation, financial, and distribution plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for February 24, 2026, foreign exchange traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $156.93 and buying at $154.93. For the Canadian dollar, moderate gains supported by $1.35 transaction spreads. The Canadian dollar sold for $115.03 and was bought for $113.68. For the British pound, continued volatility offered short-term trading opportunities of $1.10 in profits for the banks. The British pound sold for $211.12 and was bought for $210.02. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For the credit report tip of the day, when preparing to finance a fleet of vehicles, your credit report can play a practical role inside your business plan. Start by pulling your credit report and reviewing it the same way a lender would. In your plan, include a short section that summarizes key indicators from your report, whether this is your on-time payment history, how well you manage existing loan balances, and the length of your credit relationships. This helps demonstrate reliability and financial discipline. Then connect that information directly to the fleet strategy. For example, if your report shows strong installment loan performance, explain how that supports your ability to manage multiple vehicle payments. If your credit utilization is stable, highlight that it shows room to responsibly add financing. When approaching lenders, banks are essentially asking, does this borrower have a history that matches the scale of this opportunity? By positioning your credit report as evidence of financial management alongside projected revenue from the vehicles, you help lenders clearly see that the fleet is a structured business move, not just a dream. And that's today's business report. I'm Denise Williams, bringing clarity to capital, markets, and strategy. Until next time, stay informed, stay intentional, and keep building forward. See you soon.